What's up, guys? Welcome back to Trade Travel Truth T Cubed. I'm Rich. Welcome to Friday, April 24th, 2026, baby. Let's get into this. This is going to be not trying to scare you on this, but you need to start doing some shit now. They fired thousands yesterday. K-shaped economy is getting worse. You need assets more than ever, and I'm not talking about your house. So let's get into this. All right. Meta just announced yesterday cutting 8,000 employees and canceling 6,000 open job positions. That's 14,000 roles gone from one company. And it's an AI company. It's the one that does Facebook and Instagram, I believe. Then the same day, Microsoft announces buyouts targeting nearly 9,000 more U.S. workers. We're talking 23,000 jobs wiped out in a single day, two of the biggest companies on the planet. And here's this thing, neither of these companies are struggling. They're doing this on purpose to fund AI, to cut the cost, to make the owners richer. This is a K-shaped economy. If you don't know what it is, we're going to get into that a little bit today, or all of it today. Playing out right now in front of your face. And if you don't have assets working for you right now, you are on the wrong side of it. I didn't make the rules of this game. I just figured them out. And today I'm going to break it down for you. Let's get into it. So here's exactly what happened. Meta, the parent company of Facebook and Instagram, sent internal memo to employees announcing they're cutting 10% of their entire workforce. That's roughly 8,000 people. Pink slips go out starting May 20th. On top of that, they're canceling 6,000 open positions that were never even filled. So on Meta's side alone, 14,000 roles gone from an AI company. Same day, Microsoft announces voluntary buyouts targeting around 8,750 U.S. employees. That's 7% of their entire workforce being shown the door. Added up, 23 jobs affected in one day between two companies. Now here's the part that should make your jaw drop. Meta is planning to spend $135 billion on AI in 2026, right? That's double what they spent last year. Microsoft is pouring billions into data centers across the world, Japan, Australia, you name it. So they're not even going broke. They're not struggling. They're choosing to replace human payrolls with machines and infrastructure and try to make the profits go up. And they're not alone. Amazon, Google, Oracle, they've all done the same thing over the last year. So this should not scare you, but get you friggin' moving, man. You gotta pay attention. This is the biggest change in history. And if you don't, you're gonna be on the wrong side of K-shaped economy, which we're going to go into if you don't even know what a K-shaped economy is. The message from big tech, loud and clear: human labor is cost to be minimized. Assets and people who own them are the future, which means if you own parts of these companies, you're making money. If you work for these companies and don't own any of the assets, you are out of a job, obviously. I'm telling you this not to scare you. I'm telling you this because once you see it, you can't unsee it. Let's talk about the K-shaped economy. Now, what does it actually mean? Because I think a lot of people hear that term and glaze it over. So let's break it down simply. Picture the letter K, right? Can you do it with my hand? No, I can't do it. Like that, right? K. Picture the letter K. There are two lines coming off the center point. One going up, one going down. The top line, that's the people with the assets, stocks, cash flowing, real estate, Bitcoin, gold, businesses. After COVID, after every rate hike cycle, after every round of layoffs, these people recovered fast. They kept going up, their net worth grew, they invested, compounded, and the system worked for them. The bottom line is the line that a lot of people are in, probably I'd say close to 90%. That's everybody else, people living paycheck to paycheck, W-2 workers with no investments, people who only asset is savings account eaten alive by inflation. They never really recovered. Wages went up a little, but not enough. Costs went up more, and now the jobs that were safe getting automated away too. That's the K-shaped economy. Two completely different experiences, and the gap between those two lines gets wider every single year. So when you see these people saying the government's saying the economy is doing well, that's the top 10% buying most of all the crap. So it's not really doing great. It's because the dollar because we printed too much damn money in COVID, and before that 2008, and you can't give away free money without any repercussions. You just can't. And if you don't understand that, then I don't know. Here's a perfect real-world example of this. A software engineer at Meta making $180K a year just got laid off. Good salary, right? But if that was their only income, no investments, no assets, nothing working while they sleep, they just went from comfortable to stressing overnight because they were trading time for dollars. That's what you were trying to teach everybody. You cannot trade your time for money. You can't. I mean, you can at first until you build something, but the moment the company found something cheaper than their time, they were done. Meanwhile, the shareholders of Meta, when the company cuts 14,000 roles and reallocates that money goes to AI, margins go up, profits go up, stocks go up, the owners win, the labor gets cut. That's not a conspiracy, that's just how the game works, all right? So just imagine that. You're the one making 180K a year at Meta, but the guy sitting there that doesn't work for Meta that owns the stock is friggin' the one winning on this whole situation. And listen, I don't make these rules. I just have figured them out, studying the market, studying economy. That's all I'm into now. We have been lied to, and it's just, they're really just ripping us off. The government's ripping us off because they spent too much money. Once I did, I stopped trying to win by being the best employee in the room. I started focusing on becoming an owner. That changed everything. All right? I don't know how much I can emphasize this to you. All right. You're losing your purchasing power. Now let's talk about something that's quietly robbing you every single day. Even if you still have your job, purchasing power, right? Most people think if you have money in dollar amounts, I've got, say 30K in the bank, my savings account, I'm good. But here's the real question nobody asked. What can you buy for that $30,000 actually buy compared to what it could buy 5 years ago, right? Everything's going up. And it's not the price of things going up. And I hate when people blame companies for the price. It's not the companies. It's the government printing money that makes it worth less, and then you have to spend more of it to buy the same things. So you low IQ bastards out there, stop railing against corporations that are just, have to get by themselves. I'm not talking about the AI big companies. I'm talking about the people selling you the hamburger, groceries, all that kind of stuff. They're not trying to rip you off. That's how much it costs now because of the government printing money. So the answer to that, what can it buy now, is a lot less. Since 2020, groceries are up, rent is up, cars are up, insurance is up, everything costs more, and your savings account maybe earns 4% a month, or 4% if you're lucky, which barely keeps pace of real inflation, and that's before taxes and interest. Actually, 4% does not keep up with inflation. It is. Real inflation is closer to 10%. The government tried to keep it down so you don't freak out. Here's the trap. People work hard, save their money, put it in a bank account, feeling responsible, and they're actually losing ground every single year in real terms. The number in the account stays the same, but what does it buy? Shrinking every year. Here's why. Between 2020 and 2022, the Federal Reserve printed trillions of dollars. When you flood the system with new money, each dollar becomes worth a little less. That's not an accident, that's by design. They made that happen. It incentivizes investors who are saving. So that's what I'm saying, is you have to buy assets. I'm not talking about your house. The people who understand that move their money into assets, stocks, Bitcoin, real estate, And real estate, I mean by cash flowing real estate, which means they're renting it out. And I wouldn't just buy single family homes. I would buy multifamily, 4 or more. I actually probably buy more than like, I don't want to get deep down the rabbit hole, but probably 6 or more units at a time, because anything over 4, you don't have to do it comps for in the neighborhood. You just have to prove that it's cash flowing, and that's how they base the price of the real estate. So it's different than regular single family houses. Stocks, Bitcoin, real estate, and those assets inflated right along with everything else. So think about it. As they inflate money, they print more. It costs more things, like the eggs cost more, right? So what do you think the stocks are going to do when money is worth less? It's going to go, all the stocks are going to go up, and not because the companies are doing better. It's because money is getting depreciated. It's very easy once you figure this out. And those assets inflating right along with everything else. The people who held cash got silently taxed without even knowing it. So don't put your money in the bank or the mattress. And look, I'm not here to tell you the system is right or fair. It's not. I didn't make these rules, but they're the rules we're all playing by, whether you know it or not. And once you understand that cash is a slow bleed, you can actually start doing something about it. Cash is not safety. Cash is losing slower. How much cash do you actually need? Now, I'm not saying not to have any cash. You probably need it, for emergencies, 3 to 6 months. Now, this is important. I'm not saying you don't hold any cash. It would be irresponsible advice. I'm going to tell you that. I'm not going to tell you that. You need an emergency fund, period. Life happens. Jobs get cut. We just talked about that. Cars break down. Medical bills slow you up. You need a cushion to let you handle unexpected without being forced to sell your investments at the worst possible time. So that's another thing. Once you have the assets, you never want to sell them. You want to make them cash flow. And that's why I do what I do with trading options on top of my stock. The standard rule of thumb for cash is 3 to 6 months of living expenses, meaning add up your rent, your mortgage, your food, your bills, your insurance, everything you need to survive month to month, and keep that amount of cash or a high yield savings account somewhere liquid, somewhere you can get to it fast. I keep all my stuff in Robinhood. There's like actual stocks, and then there's a little thing called buying power. Buying power just means the money I can buy more stocks with, but I keep that number in there just to have it fast. It can go into my bank account. I have a Robinhood bank account, so I can transfer it over instantly. And I also get I think 4% just keeping it in Robinhood. So I'm like, why don't just keep it there? Stupid to have it in my bank. This way I can just instantly buy more stocks if something happens. It's awesome. Robinhood has changed my life. If your monthly expenses are $4,000, you want somewhere between 12 and 24 sitting in cash as your safety net. That's it. That's the floor. God, it's cold out here. Sorry, it's friggin' 40 degrees still in Massachusetts. Now here's where most people get it wrong. They treat their emergency fund like their investment account. They keep piling more and more into savings way beyond the 3 to 6 months buffer, thinking they're being smart and safe. But everything beyond that emergency cushion, that money is losing purchasing power every single day, and it sits there. It needs to be working. So the move is simple. Build your 3 to 6 month emergency fund first, non-negotiable. Do that before anything else. Then every dollar beyond that, put it to work. Stocks, Bitcoin, gold, something that grows, something that beats inflation, something that puts you on the right side of the K-shaped economy. Yeah, it's going to get bad. There's probably going to be protests and violence in the streets eventually. Cash is a tool. Use it enough. Use just enough of it, then invest the rest. All right, the assets you need. Let's talk about assets. So what do I actually do? Let me tell you what I think makes sense right now and what I'm personally put my own money into. First of all, I'm not a financial advisor. This is educational. You need to learn about the economy. I mean, if you don't, you're killing yourself right now. First, I want to be really clear on this. I'm not talking about your house. Everyone says a house is an asset. A house you live in is a liability. It costs you property taxes, insurance, maintenance. It ties up capital that could be compounding somewhere else. Now, if it's a rental that cash flows every month, that's a different story entirely. Your primary residence is not a wealth building move. Most people think it is. It just isn't. I mean, if you net it out over time, the big down payment, that could be making way more in the stock market. It's just do some research on that, please. I hate people to tell me, oh, I'm going to retire off my house. That is the dumbest thing to say. Sorry. But a lot of people, most of the country, that's the only thing they have for retirement. So I'm talking about productive assets, things that work while you sleep. Stocks. You know who's doing the layoffs right now? Meta, Microsoft, Amazon. You know what happens when they slash costs and pour their money into AI? Earnings go up, right? They're laying off people and earnings go up. Margins go up, stocks go up. The people who own these companies with stocks benefit from the exact same decisions that are hurting the employees. I run covered calls on my Tesla position, collecting premium every single week from a stock I already believe in long term. That's an asset generating real income for me while I sleep. Bitcoin. There will only ever be $21 million of Bitcoin, ever. The dollar, the government can print as much as they want, whenever they want. Bitcoin is the hardest money to ever be created. It's volatile. I won't sugarcoat that. But as a long-term hedge against the system that keeps printing and devaluating its money, is one of the most it's one of the most biggest bets on the table right now. If you don't understand Bitcoin, I'll do a video on breaking it down. So just leave a comment if you want me to do a video on Bitcoin. Gold, the oldest store of value on earth. Central banks are buying it at record levels right now. Why do you think that is? Because the dollar is getting tanked. When government and institutions are stacking gold, it tells you something. It doesn't generate cash flow, but it holds purchasing power across generations. There's a reason it's been money for thousands of years. The theme across all three: you become the owner instead of just a worker. And in a K-shaped economy, one that is getting worse, by the way, not better, the owners are on the top line, and that of that K. The workers are on the bottom. It's really that simple. Look, I want to be real with you for a second. I didn't make rules of this game. I just figured them out. I'm telling you straight, it's not a fair game. The system is built a certain way that most people were never taught how it actually works. Nobody sat you down in school and explained a K-shaped economy. Nobody told saving cash was a losing strategy. Nobody explained the same companies cutting jobs, making their shareholders richer doing it. But once you figure this out, you might as well use it to your advantage. That's not greedy. It's not selfish. That's just being smart with the hand you've been dealt. So it's another thing, we're going to get a little liberals. They always bitch about the rich people making money. Hey, they figured it out. You can figure it out. Everybody, I'm telling you how to figure it out right now. Stop buying shit you don't need. Louis Vuitton purses, dumbass Lamborghinis. Stop going out to eat all the time. Stop going on vacations and putting it on credit card. Just little things. You don't deserve, sitting there that you work, I deserve a vacation. I deserve to do this. I deserve to do that. Nobody deserves anything. You have to figure this shit out and work against it every single day. That was the whole reason I built this channel, Trade, Travel, Truth. Real strategies, real financial freedom. I document exactly what I do with my own money in real time so you can see it, learn from it, and apply it to your own life. Again, do your own research. Don't take my word for it. If this video hit home for you, please do me a favor, subscribe. Drop a comment below. Tell me which side of the K you're on right now. Probably most people are going to be on the downward. I was on the downward until I figured all this stuff out. And what's one thing you're going to do differently after watching this? I'll read every single comment. I'll see you on the next one. All right, guys. Have a great day. It's Friday. Please start researching this stuff. Pay attention. It's starting to happen really quick now. That's it. I'm out. Later.